Have you ever wondered how India's economy has become a global powerhouse? It's a tale that's as fascinating as it is inspiring, one that's woven with resilience, innovation, and a relentless pursuit of growth. Over the years, India has transformed from a primarily agrarian economy to a vibrant, diverse, and dynamic one. The seeds of this transformation were sown post-independence, but the true metamorphosis began in the 90s with the onset of liberalization. This era marked a significant shift in India's economic policy, opening the doors to foreign direct investment and paving the way for a more market-oriented economy. But the story doesn't end there. One of the most compelling chapters in India's economic narrative is its journey in the stock market. The Indian stock market has been a mirror reflecting the nation's economic health and growth. From humble beginnings, it has grown into a robust platform that fuels the Indian economy's engine and provides opportunities for millions of investors. There have been notable milestones along the way. The establishment of the Securities and Exchange Board of India, or SEBI, in 1992 was a game-changer. It brought about much-needed transparency and accountability, ensuring a level playing field for all market participants. Then there was the introduction of the Demat system in 1996, which revolutionized trading by making it more accessible and efficient. This move not only boosted investor confidence, but also led to a surge in market participation. And who can forget the historic moment when the Bombay Stock Exchange, one of the oldest in Asia, hit the 20,000 mark for the first time in late 2007? It was a testament to India's growing economic clout and its potential to scale even greater heights. These milestones, and many more, have shaped India's economic journey, turning it into a force to be reckoned with on the global stage. It's a fascinating journey, one that's seen India become a formidable player in the global stock market. The genesis of India's stock market journey can be traced back to the 19th century. In the bustling streets of Bombay, now known as Mumbai, the roots of this journey were being meticulously planted. The year was 1875, and a group of stockbrokers gathered under a banyan tree, setting the foundation for what would become one of the world's most dynamic stock markets. This humble gathering marked the establishment of the Bombay Stock Exchange, fondly referred to as the BSE. The BSE, the oldest stock exchange in Asia, started with a meager number of 21 members. Despite its modest beginning, the BSE quickly gained prominence, acting as a catalyst for India's financial growth. The BSE was not just a marketplace for trading stocks, it was a beacon of economic progress, a testament to India's financial potential and the epicenter of the country's financial heartbeat. It played an instrumental role in channeling the savings of the nation towards productive investment, thereby fostering economic growth. In the initial years, the BSE experienced its fair share of trials and tribulations. It weathered numerous storms, from the economic depression of the early 20th century to the effects of 2 world wars. Yet it remained resilient, emerging stronger with each challenge. The early days of India's stock market were not just about the BSE. In the year 1947, when India gained independence, there were as many as 23 stock exchanges in the country. However, the BSE's significance in the Indian stock market landscape was unparalleled. As the years rolled by, the BSE continued to evolve, constantly adapting to the changing economic environment. It transitioned from an open outcry system to an electronic trading platform, demonstrating its adaptability and commitment to innovation. The BSE, which started with a handful of members under a banyan tree, now boasts of over 5,000 listed companies. This was just the beginning of an extraordinary journey that would see India rise to become a stock market superpower. The BSE's evolution mirrors the growth of India's stock market, a journey marked by resilience, innovation, and an unyielding spirit of progress. The 1990s marked a significant turning point in India's stock market journey. This was the era of economic liberalization, a time when the Indian government took some radical steps to open up the country's economy. But what does economic liberalization have to do with the stock market, you ask? Well, the answer is everything. You see, prior to the 90s, India's economy was heavily regulated, and protective barriers were in place to shield domestic industries from foreign competition. This led to a lack of competition and innovation, and the stock market was no exception. With limited participation and a lack of transparency, the Indian stock market was more of a gamble than an investment. But then, things changed. The economic liberalization measures introduced in the 90s opened up the market to foreign investors, and this was the catalyst that the Indian stock market needed. Suddenly, there was an influx of foreign capital, and the market started to grow at an unprecedented rate. But it wasn't just the opening up of the economy that changed the game. The government also realized the need for a regulatory body to oversee the stock market, and thus the Securities and Exchange Board of India, or SEBI as we know it, was born. SEBI played a crucial role in regulating the market, ensuring transparency and protecting investor interests. Around the same time, another game changer was introduced: electronic trading. This was a major technological leap that transformed the way trades were conducted. Gone were the days of physical trading floors and hand signals. With electronic trading, transactions became faster, more efficient, and most importantly, more transparent. These reforms, the economic liberalization, the creation of SEBI, and the introduction of electronic trading were not just steps, but giant leaps in India's stock market journey. They brought about a level of transparency and efficiency that was previously unheard of in the Indian stock market. These reforms paved the way for a more robust and transparent stock market system in India. Fast forward to the 21st century, India's stock market has reached new heights. The nation has recently leaped into a new era of economic prosperity, marking its entry into the $4 trillion club. This is no small feat. It's a milestone that firmly establishes India as a formidable force in the global stock markets. This phenomenal achievement is the result of a combination of factors. The first is the persistent dedication to economic reforms, leading to a more robust and regulated market. The second is the surge in foreign direct investment, fueled by the country's rapidly growing tech and startup sectors. The third is India's burgeoning middle class with its increased appetite for investment. India's entry into the $4 trillion club is not just about the numbers. It's a reflection of the country's economic resilience, its potential, and its ambition. This accomplishment is also a testament to the increasing confidence of international investors in India's growth story. But what does this mean for the future? Well, it certainly paints a promising picture. With continued reforms, a focus on innovation, and an expanding consumer market, India's stock market is poised for even greater heights. The country's ascension to the $4 trillion club is not the end of the journey, but rather the beginning of a new chapter. A chapter where India not only contributes to the global economic narrative, but also shapes it. As we celebrate this significant milestone, let's not forget the lessons learned along the way. The road to the $4 trillion club was not smooth. It was paved with challenges, trials, and tribulations. But it was also marked by resilience, innovation, and a relentless pursuit of economic progress. And so, as we look forward to the future, we can expect India's stock market to continue its upward trajectory, powered by a dynamic economy, a young and vibrant workforce, and a spirit of entrepreneurship that is hard to match. India's journey in the stock market is a testament to its economic resilience and potential. India's stock market journey is a story of resilience, reform, and remarkable growth. From its humble beginnings, it has navigated through a series of economic reforms, displaying an undeniable resilience. Its recent entry into the $4 trillion club is a testament to its remarkable growth and the potential it holds. In this journey, we have seen the birth, the evolution, and the rise of a stock market superpower. As India continues to grow, the world watches with bated breath, for the future holds even more promise for this economic powerhouse.